big, and then we'll kind of dial it in. So let's talk about what's going on in the world. Let's talk about the global economy and what's going on. So, I'll just, with respect to interest rates, trade, GDP, taxation, inflation, why don't we, don't have to hit all of those things, but maybe focus on one thing. Just, what do you see going on right now, and, what do you, like going into, 2020 and then going forward, just what do you see happening right now globally, and what do you see happening, just over the next maybe 24 months through 2020 and 2021, just with any of those indicators that I mentioned?
I would just say globally, I think a lot of people are waiting to see if Trump gets reelected. And because of what he did with the last tax act, I think many people are expecting a couple of things to happen right before the election that recharges the economy even more, just like everyone thought it was going to go down, and then the tax act came out and kind of extended everything a few more years beyond what the smartest people thought would happen. So I've got one client going through a $100 million plus exit, and they're just exiting all of their assets in the real estate space until right before the election, and if he gets reelected, they'll go back in. And if he doesn't get reelected, they'll go back in, but look smart again, buying when things go down, in their opinion.
Globally, let's start with Asia. We've positioned ourselves there with a company similar to Uber. It's called Grab. We bought into that through Macquarie Investment Bank. We saw an opportunity in the sector of transportation. You need to keep in mind that 2/3 of the population and the major consumption, which is about 80% worldwide, is in that side of the world. I think I gave a pretty good depiction of how the world's population is going to be growing. So we need to take into account where consumption will be moving in terms of services and goods that you're providing. From an interest rate point of view, or following what's going to happen with the U.S. administration, it really doesn't matter outside of the U.S. because taxation is not an issue for us. And if you're dealing with export-import business, but you can always hedge those currencies to the dollar because everything is pegged to the dollar. So the hope is that the dollar would remain weak, which I think is what the administration is trying to do, and it's beneficial to the U.S. as well. In investing, attracting foreign investors into the U.S., as well as other capitals, which you've seen here already happening in the real estate arena. You look at Florida, where Brazilians, Russians, and Chinese money have been buying tremendous amounts of real estate, and you can voice for that. New York City, exactly the same thing, and it's happening. It's happening all throughout, and we need it. Here in Alabama, you'll see foreign companies opening manufacturing plants. That's your sign. So that's just how we're positioning ourselves. In the U.S., I maintain our money in euros, and I'll just bring to the U.S. whatever money I need. Clearly, having the money, our capital in euros is more advantageous because it's more expensive, and I'll buy more dollars per euro. So as long as the U.S. is weak, I like it. I will keep my money in euros.